All right, so what's going on, guys? Super excited for today's video. We're going to be looking at ticker symbol BLNK, blink charging. All right, the EV sector is heating up. This is a sleeper play. I think that this one can also wake up and it has some great long-term potentials. And here, short-term, it's doing really well today. It's up over 5%. I think short-term, it's got some good possibilities as well. So I want to show you guys a couple plays that we're looking at in the Discord that I'm currently looking at. All right. The link to join the Options Trading Tycoons Discord will be down below in the description. If you guys want to join, go ahead and click that link and join. Very awesome group. Okay, so these purple lines right here are going to be our resistance levels. Okay. And basically where the stock is going to have trouble getting past. Okay, these are going to be our resistance levels. Okay, as you can see, this was a previous resistance level. We have one here, here, here. Okay, all these resistance levels. All right. This box right here, I want you guys to see, this is what's known as box consolidation. All right, we're looking at the daily chart, the 1-year daily chart. Okay, and if we zoom in here, okay, we can see that the stock has just been bouncing up and down in between this box. Okay, so we're here at the bottom. We could, go back up to the top of this box again. As I said, we have these resistance levels. Okay. But also what I think, okay, is what I want to show you guys is from October last year, okay, up to, let's say, January, mid-January, okay, the stock price went up. Let's see how much it went up. Went up over 750%, okay, in about 90 days. All right, so in 3 months, the stock went up over 700 something percent. So if you're looking for one of these stocks that are like, man, how is it that all these people just got rich so quick in just a couple months? It's plays like these, okay? So if you think that this pattern may happen again, okay, that you think that this could happen again, all right, we're coming into we're ending October, we're coming into November right now. As you can see here, November 2nd was really the beginning of this big push, okay? So that could happen again. It could repeat again. I'm going to show you guys a couple things, show you guys some spreads to look at, okay? So short term, if we look here on the 4-hour chart, all right, we have a inverse head and shoulder possibly playing out right here, okay? Here's our left shoulder, here's our head, here's our right shoulder. As you can see, we broke above the neckline here and it's going up. So most likely we're going to go up to here to this 33 mark. Okay. But I want to show you guys some spreads I'm looking at. Okay. So for this one, for instance, to catch this play, I like these two right here. I like the 32 calls and the 35 calls. Okay. They have the highest amount of volume right here. All right. So we'll go here. We'll click vertical. Okay. And then it's going to bring up the calls that we want to buy and sell. Okay. So we want to buy the lower strike, the more expensive option, the 32. Okay. And then we're going to sell the 35, the less expensive contract with the higher strike. Okay. So that'll bring us to an average cost of 94 contract. Okay. If you bought 10, it would cost you $953 and your max profit. Okay. Meaning that by November 19th, at the end of November 19th, the stock is $35 or higher, your max profit is going to be $2,000. Okay. So that's about a 200% play right there that you could look at. I wouldn't recommend holding it through expiration. Okay. What you're doing is you're saying, okay, wow, there's a max profit of 200%. So I know if my play is up 100%, that I'm halfway through the most I can get out of this play. Okay. So it kind of helps gauge you. Okay. If you have a play that's up, that has a max profit of like, 1,000%, for instance, you might not want to sell at 100%, but if your max profit is 200% and you're at 100% and it's before your expiration date, you could definitely close that. And that's a great winner. Okay. That's definitely a win. All right. Short term, if you want to play that head and shoulders, I do like this spread. I think with this spread, if things keep going well over the next few days or the next couple weeks, you could easily get 50 to 100% on this spread, if not the full 200% profit. Okay. And then another one I'm looking at, okay, is going to be down here, the January contracts. Okay, I like the January. I like the January. Let me see here, which ones I was just looking at. 50 and 60 calls. Okay, and I'll show you why real quick. But let me show you what the January 50 and 60 calls would look like. Okay, the January 56 calls would cost 29 bucks a piece. So for 10 of them, after you know, commissions, fees, be $300 cost basis with a max profit of 9,710. I really, 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 really like this spread a lot. Okay, and I'll show you why. It's because of what I just showed you guys earlier. Okay, this thing ran up 700%. Okay, in 3 months. All right, we're in November right now. November, December, January. That's 3 months. All right. What's really also interesting to me, okay, is that, okay, so we're doing the 60-65 spread, right? I believe, no, the 50-60. Okay, so it already has shown that it can go above 60. Okay, you can choose a farther out spread. It's less risky. I like this one in particular for me for January. But if you see, it ran up much past 60. Okay, and if it does that again, where it tries to go up hundreds and hundreds, 100% from November to January, okay, this contract, as you can see, will definitely pay a bunch. Okay, now if you notice, this is the only one that has strike prices of 90, 50, 60, etc. Okay, if you go to the March, okay, they stop at 50. So it's pretty interesting to me how only for January you can get that, right? If we go to December, let's take a look at December. December goes up to 65. Okay, it's real interesting how in January, this one particular month, okay, which I'm predicting it's going to make super highs. That's what I think if it repeats that pattern. It doesn't have to, but if it does, it'll go above 60 and perhaps even reach 90. Okay. I think that it's funny that the 1 month of that, it seems that that's going to be able to happen. They're selling contracts with those strike prices. But if you go further out, you can't buy a contract for 90. So I just think that that's real interesting. Let me know what you guys think down below in the comment section. Hopefully that was a nice little tutorial on how to do a debit spread, a call debit spread. Okay. We'll go over it again. So if we want to do the January 50-60 spread, we'll right click this. We're going to click vertical. All right. And we'll change this to the 60 because this is the ones we're selling. So we're buying these 10. We're selling these 10 right here. Okay. And yeah,